This market analysis features a major update from Willy, where he shares his latest insights on the current state of the Bitcoin market cycle. He recently posted a few tweets that gained a lot of attention, which we will review and break down one by one. He tweeted, "We used to have two overlapping 4-year market cycles, but now there's really only one main cycle left. Driven by global M2 liquidity, the total money supply. In my opinion, the next major bear market will be shaped not just by crypto trends, but by something people often forget: the business cycle. This is the natural rise and fall of economic activity over time. Expansions followed by slowdowns or recessions. The last major business cycle downturns that truly had a global impact were in 2001 and 2008, both happening long before the cryptocurrency markets even existed. As the world economy tightens again, we may soon see how traditional economic forces start influencing crypto, the same way they do stocks, housing, and other markets." Willy elaborated further, saying, "Bitcoin's market often moves in sync with two major cycles: the halving cycle and the global M2 liquidity cycle. Central banks tend to inject money, M2 debasement, roughly every 4 years, which coincides with Bitcoin's halving schedule. When these cycles overlap, they can strongly influence Bitcoin's price trends. If we experience an economic downturn, like in 2001 or 2008, it will be a real test of how Bitcoin behaves. Will it fall sharply like tech stocks did, or will it act more like gold, holding its value better during crises?" Interestingly, one follower raised a good question. Hasn't Bitcoin been disconnected from M2 liquidity over the last 5 or 6 months? This observation suggests that other factors, such as market sentiment, ETF flows, or adoption trends, may be playing a bigger role in Bitcoin's short-term price action than before. Willy quickly replied, saying, "Only in short time frames. Markets are speculative, which means they tend to price in future events, including changes in M2 money supply. If you look back at past market tops, you'll see that stocks moved ahead of M2 liquidity, and Bitcoin moved ahead of stocks. So this could mean one of two things. Either Bitcoin is signaling that global markets have already reached their top, or Bitcoin still has room to catch up." Willy also followed up with another tweet saying, "In the last bull market, most of the liquidity that pushed prices to the top came from paper derivative markets. These paper instruments are short-term by nature. Traders jump in quickly to make gains, but don't stick around for long. This time, the cycle looks different. The influence of paper markets is already fading, while real, longer-term spot liquidity is still holding steady. That suggests this market may be building a stronger and more sustainable foundation, supported by actual buyers, rather than short-term speculation." Willy continues to emphasize that this shouldn't be mistaken for a bullish signal or the start of a supercycle. He explains that market optimism can change very quickly. If the available spot liquidity, meaning the amount of Bitcoin being traded or sold by long-term holders, begins to decrease, the market can shift into a bearish phase almost instantly. In other words, strong investor confidence can vanish fast if liquidity dries up, reminding traders to stay cautious and not assume prices will keep rising without real market support. And if you have kids or a young family, make sure to teach them about Bitcoin as early as possible before it's too late. This Bitcoin Teen ebook is the perfect guide to get started, providing simple explanations and practical tips to help young minds understand and navigate the world of cryptocurrency. Link is in the description.